There's some horror stories that I've heard about people who got into HELOCs that they really didn't understand, and when it came to the repayment period, they had a 3x increase in their payment. A HELOC can be a powerful financial tool, but if used incorrectly, it can be a financial trap. Hi, I'm Peter with The Clear Close, the mortgage experts that help you get clear to close on your next mortgage. And today I'm going to walk you through how to use a HELOC without going broke. But before that, please consider subscribing to the channel. It costs you nothing and it helps us out a ton. Plus, it gets this information out to more people that could use it. All right, back to the video. Quick refresher, what is a HELOC? A HELOC is a home equity line of credit. You get a line of credit from a lender and it's collateralized or it's backed by the equity you own in your home. Right? So you go through an approval process for a maximum line amount. Let's say the maximum is $100,000. We're just using an example here. So you have $100,000 line of credit. You can draw from that line as much as you want until you max out. And whatever you use, you pay interest on. And if you've never had a line of credit before, think of it kind of like a credit card. It's very similar in the sense that there's a limit. You spend up to that limit and you have a certain time period where you need to pay it back. And in between that time period, let's say you pay down the balance a little bit, well, you can spend back up to that maximum again. And remember, one of the great things about a HELOC is the flexibility that you only pay interest on what you use. Let's say you have a maximum line of $100,000, but you've only used $50,000 of it. Well, you're only paying interest on the $50,000. HELOCs are structured in a unique way where there's a draw period and there's a repayment period. A draw period is the time where you can use the maximum line, repay a little bit, and reuse it again. Repay it, reuse it again. And then after that draw period comes something called a repayment period, where you're no longer allowed to use that credit and you're now locked into a repayment period. There are HELOCs that use a variable interest rate, but there are HELOCs that use a fixed interest rate. And we could talk about that a little bit later. So here's where people mess up. I'm going to give you the biggest mistakes that people make when utilizing their HELOC and how you can avoid them. Mistake number one is using this HELOC like it's free money. Remember, this is a loan. Loans cost money. You are borrowing money from a lender. It's a secured debt backed by your house. If you default on the loan, which means you're unable to pay it back, the bank can foreclose on your home because your home is what secures the line of credit. So yes, you can use a HELOC for whatever purposes that you want. It's in that way, it's very flexible. However, you have to remember it is still a loan. So my recommendation, if you're going to pull out a HELOC, have a strategy in place. Use it for something that's going to generate income. Use it on something that could add value to your home. So when you do sell it, you can recoup some of that cost. Mistake number two is getting a variable interest HELOC and not considering the rate fluctuations. So like I said, a lot of HELOCs are on variable interest rate schedules, whereas other HELOCs are on fixed rate schedules. If you choose to get a variable interest rate HELOC, hey, that's a decision you made. Maybe there was a strategy involved in there because variable interest rate could mean that your upfront rates are lower and you had a plan to get out of that HELOC very quickly. That's great. However, if you don't plan ahead with this type of HELOC, you could be putting yourself in a potentially difficult situation. The ways I would avoid this type of situation is to shop around. Figure out what really makes sense for you with your strategy. Is a fixed rate HELOC that fully amortizes down to zero better for you, or is a variable interest rate that has more favorable terms upfront better for you? Remember to share this information with your mortgage originator or your broker and let him know what your strategy is, and they should be able to help you and guide you to what product best suits you. Another recommendation is run stress tests. Ask the question, if the rate goes up 1% or 2%, 1/4%, what will my monthly payments look like? And if those numbers are acceptable to you or it's not going to change your life, then maybe it's okay for you, but still you should run those stress tests to see what the worst case scenarios could be. The next mistake is not having a repayment plan or an exit strategy. Remember, this is a second mortgage. You still have your first mortgage intact and you're paying the monthly payments on that on the regular. Once you introduce a HELOC or any other second mortgage for that matter, you're going to incur additional monthly payments. So if your income is not generating enough cash to pay back both comfortably, then what you're going to need to do is before even signing that HELOC document, you're going to need a way to exit this loan. So are you flipping the house? Are you selling the house? Are you planning to refinance? What is it? Talk to your broker, talk to your originator, and make sure that you have a sound repayment strategy before even signing that paper. And the final mistake is over leveraging yourself. Many of us have dreams and aspirations of becoming millionaires, and there's many paths to get there. Real estate is a great way to achieve the type of wealth that you're thinking about. It's been proven by many, many, many people. But as with anything, when you over leverage yourself, you put yourself at greater risk from factors that are beyond your control. Like, for example, the economy or inflation or the job market. Things change all the time. And if you have over leveraged yourself or you extended yourself too thin and you really haven't considered the downside risk to what you're doing, then this could be a big mistake. So remember, don't over leverage yourself. Stay safe, stay informed, and get as much advice as you can from people who are looking out for your best interest. All right, let's bring it home. Using the HELOC the right way means being strategic, having a game plan and understanding your numbers. Bottom line, if you can't explain why you're taking out that money and how you're going to pay it back, you shouldn't use it, period. And this goes with any kind of loan. But if you're a homeowner with good credit, with equity in your home, and a solid plan, a HELOC is a great way to help you save money, scale investments, or increase your home's value. Now, if all of this sounds great to you and you're wondering, where can I even get a HELOC? The Clear Close offers HELOC programs, HELOan programs, reverse mortgages, purchase products, VA, we do it all. And the HELOC program that we use, honestly, it's one of the most competitive options that we've seen on the market. Remember, we're not employed by the lender, we're brokers. Our job is to access hundreds of different loan products and bring them and match them to your specific needs, whether it's a HELOC, a HELOan, or any of these other regulated mortgage products. Just a quick plug, this is why our HELOC stands out. It's not unheard of for this program to have same-day approvals and even fund within 7 days of approval. Ours is a fixed rate loan, which means it's going to stay the same the entire life of the loan. There's no hard credit pull or income documents that are required. And this program was built for the internet age. No in-person appraisals. They do everything electronically, using something called an automated valuation model. And of course, rates may vary from time to time and by different credit profiles and by state, but once you lock in that rate, it's that rate for the whole loan. Also, it's fully amortized. So whether it's a 5, 10, 15, or 30 year, your payments are going to be predictable. And best of all, this HELOC does not have a prepayment penalty. You can borrow the maximum amount, pay it off within a year, and there's no penalty to you. We can't say that for many of the other loan products out there. Now, these are just some of the highlights of the HELOC that we offer on our platform. So again, if you're sitting on a lot of equity and you're a homeowner and you have good credit and you're wondering how you can make it work for you, but you don't want to get burned in the process, go ahead and use the link in the description, schedule a one-on-one consultation with our team. We're going to walk through your goals, your numbers, and help you figure out whether this HELOC is the right move or there's another product out there that matches you better. As always, if this information helped you out, please subscribe, like, comment, and share it with a friend who could use it too. All right, I'm Peter with the Clear Close, the mortgage experts that get you clear to close on your next mortgage. We'll see you guys on the next one. Bye.